price appreciation must slow down. Why? Well, stay tuned. The market is rebalancing, and I'm going to share some data. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California realtor. Today, we're digging into the closed data for May 2022, and we're going to discuss the indicators I'm seeing out in the field as well as the closed data to really get a feel of what's actually happening in our local Silicon Valley, San Jose market. So let's jump into the computer. Let's look at our big chart on Santa Clara County. As you see here, it looks like the local Silicon Valley market peaked in April. We see a slight down on the average and median prices. The yellow line of supply is increasing, and it's higher than we've saw any time during the pandemic. It's up 23% from just a year ago, year over year for the same month. The demand is good, but it is slowing. We've got higher interest rates, decrease in stock portfolios. So sales are showing down 29% from May 2022 to May 2021. So there is a shift in the market from a year ago. So price appreciation must slow down because the factors of supply and demand are going opposite directions. Think about it. Even if the same buyers are out there or the same demand, but we have a lot more choices, there's going to be less buyers per house, right? Now, the pandemic inventory never hit more than 1,000 homes for sale. And currently this first week of June 2022, we're at 1,100 single family homes are ready for sale. And also that demand is slowing, like I mentioned before, because of the interest rates and the stock portfolios. So here's the San Jose market chart. Again, we're seeing very similar things. Supply is higher than any time during the pandemic. We have less showings and less offers on active properties that are going into the pending status. So again, the market is rebalancing a little bit, but looking forward, the market is not bad. The pandemic was crazy, so don't freak out. We're gonna talk a little bit more details about that today, but 2020 average appreciation was 12.6%. 2021 at 23% for San Jose. And in May 2022, we've already had 17% appreciation year over year. All the predictions said that in 2022, we'd see 8 to 10% appreciation because the average over 10 years is 11%. And we've had huge appreciation the last couple of years, so it only makes sense it would settle, but also supply and demand, higher supply, lower demand, it's gonna settle a little bit. Now, it's still appreciating over the year, but it is not appreciating as much. So let's look at the actual stats here of how the market in San Jose is actually looking. The average price of $1.864 million, which is down 3% from the previous month, but still up 17% like we talked about. Percentage of homes in contracts continues to keep dropping. We're only at 60%, which is still good, but not as good as the last few months or even last year. Sales price to list price ratio is decreasing as well. A year ago, though, it was 111%. Today, 113%. Last month, 116%. And if you remember, I think we peaked at like 118 or 19%. So the overbidding is definitely calming down a little bit. Days of inventory is also increasing because there's just more inventory on there and homes are not selling as fast. And we closed 450 homes in San Jose in May 2022, which is down almost 10% from the previous month and down 18% from the year before. I mentioned on that first slide we were down 23%, but that was Santa Clara County. San Jose is just down 18%. So other areas are experiencing a little bit more of a slowdown than San Jose. But the pending sales are also down. They're up tiny bit year over year, just 4 units though. So I would probably call that pretty flat. So I want you to stay tuned for what is good about this market, because I know you see this red and maybe you're feeling like the sky is falling, but it's not. Let's talk about what's good, and we're gonna talk about the condos as well, so stay tuned. So let's look here at the San Jose market and what is coming. The traditional market peak is usually May to July. I think we saw here in 2022, maybe a peak in April. You see April here, May slightly down. In 2016, the peak was April. 2017, the peak was December, but look at that low inventory we saw in 2017. So it was a different year. 2020, the peak was October because we had recovered from the pandemic and things didn't have the traditional spring inventory. So it was actually a little bit later. 2021, it was December. We actually had a little peak in the summer and then it increased again. So wouldn't be unusual for the peak to be April, maybe slightly early, but after that appreciation we had in 2021 and the late peak last year, it's not surprising. So by buyers, what is good about this market? You might be wondering, you feel a little depressed, you feel like this overbidding, it's frustrating, the cost of buying is higher because of interest rates. The good news here is that we are settling into a more normal market where you're going to have choices. Also, you might just have to pay appraisal price, not way over. I think that's also a huge advantage for you. So stay to the end because this is not 2008. Don't panic. We're going to talk about today's market versus 2008. So let's talk a little bit about the interest rates. Interest rates, as you can see from this chart here, are settling a little bit, but on June 14th and 15th, it's likely going to see another hike. You might ask, are these higher interest rates any good for me? Why are they good for me? Well, first off, the Federal Reserve is doing this to get us a more stable economy and environment. They're trying to decrease inflation, encourage savings by people. Average interest rate over time, this is since 1971. I took this from the mortgagereports.com. The average is 7.77%. So we are still way below historical averages, even with this huge increase that we've seen in the last several months. It is normal to have a higher interest rate to make a more stable economy. And I know it feels painful right now as we rebalance, but it is healthier for the economy longer term. Now let's look at some of the market fundamentals to talk about how the overall economy is doing. Here in Silicon Valley, Santa Clara County, unemployment is very low, still dropping at 2.2%. The average price versus the S&P 500, we all know the stock market has been way down. You look at this green line here, the average prices haven't dropped that much, but it's likely they're gonna trend downward a little bit because those stock portfolios are really taking a hit. Today is nothing like 2008. Do not panic. Number one, loans are really hard to qualify for. Back in 2008, you could get a no money down or a stated income loan. That is not the case. If you've bought recently, you know how painful of a process it is to get through a loan. We just here in Silicon Valley have very qualified buyers with great income. Second is the homes for sale or the inventory. This yellow line is at 1,100 single family homes like I talked about earlier for Santa Clara County. Back in 2008, we hit 7,500. We are nowhere near that yellow line track of 2008. 50% of the homes are in contract in Santa Clara County, where back in 2008 area, it was 11%. Again, a huge difference in demand and supply. And the unemployment, 2.5%. In 2007, it was in the 5% range and it jumped all the way up to 12%. And it took 6 years to recover. We are not in that kind of a job economy. So don't panic, this is not 2008. Now let's look quickly at the condo market. Supply is starting to catch up, just like the single family market. Sales are up, but not up from last year. We are a little bit lower than that, but higher than many of the previous years before that. So I predicted that prices would shoot up, which indeed they did. And now we have some good gains over that 2018 peak, but they are starting to settle, just like the single family market, because the buyer environment is taking some adjustment, period. What you should do next is take a look at a couple of my basic videos that go over some fundamentals. The first one is 5 buyer mistakes that you should never make. You should watch that video. The second is a blast from the past on pricing a home to sell. It is one of my first videos, but sellers, this is really crucial in this market. Thanks for joining me.